G'day all, Benny Reese West. Going to take a look at gold for this week, see what we can see. So we'll start off as we always do. We will brush over the US dollar. We'll have a look at gold itself, and then we'll have a look at the gold miners ETF. Now where we left the US dollar last week, we're around about here. Actually, we might have been just a little bit further, just a couple of bars on. Okay, but what we were observed is we'd seen this very precise measured move target back into the retracement zone of the larger retracement to test out some of this. Okay, so that is what we were dealing with. So what we had done from here is we'd gone, okay, where is the next measured move target? Well, here is the top, here is the bottom. Okay, and here is the retracement zone, with the ultimate point being here at the 61.8. So as we step through, what happened? Oh my God, how did he know? Well, I didn't know. That what I'm pointing out is there is just a tendency of the market to do this. Okay, the reason I point it out is because I see it happen all the time, and lo and behold, it happened again. But interestingly, what happened on the way up? Okay, there's one. Okay, you can see it, right? Not 100% exact. There's one. Okay, what was the next one? Well, we hit here, and what did we retrace to? There. Okay, so here's the next one, where we went up, we retraced, and we got to the target, which overlapped the 61.8 of the other one. Okay, and now what have we done? We've failed away. So what I'd say now is, okay, well, the little measured move that took us up into that zone are now done because we've got through. But of course, on the other side, we've hit that larger one coming back the other way, which is probably the dominant theme of the market just as we sit here and now. But this is where this gets funny, right? Because it's like, okay, well, and then obviously where are we sitting here? We're just approaching this. So this becomes the next point of call. Okay, now just briefly on the US dollar, what's concerning me a little bit is that I've always sort of had it in my mind that the narrative of cuts coming last month was a little bit optimistic, and it's kind of proven that the Fed keeps pushing back on that, and there's certainly plenty of data points that continue to push back on the idea of rate cuts soon. So I think while I think the next move will be a cut, it just may not happen. I'm not against the idea that we don't cut rates in the US this year. I think there's a good chance that happens. I think a lot of the pricing is very optimistic. So we will see. But of course, the problem becomes that this might, start swinging back up as the market has to scramble to reprice the idea of cuts, of when the cuts are coming. So if that happens, that of course is going to have some connotations for gold. But right now, I think we've just had, that. Okay, and now we are just in the throes of working on this, and everything's just lining up perfectly at the moment. So there's no reason to not stay a little bit bearish this US dollar. But certainly, if this gives way, I'd be back thinking long and hard about it. So just in the short term, I would just be coming back the other way. It's like, okay, well, if the US dollar continues to weaken off, okay. And starts to get through its retracement zone and starts to head back down here, well, that measured move plays on. And if that happens, then, of course, the price of gold, as well as the other precious metals, will likely be not guaranteed to rally, but supported. And so that brings us on to gold itself. So I think last week we were talking about, it was starting to get, I think maybe we were somewhere around about here, or we're talking about, I sort of said I wouldn't necessarily short this market because I think it's, because of the way that the trend was going, but it's getting dangerous to buy it, okay? And I don't know. All I do is I just tell you what I see, and all I saw is a market that was starting to get parabolic. We started getting outside these Keltners. We had two good bars printing outside the Keltners, and now we've had a more major correction in price. But, interestingly, you can see that the same phenomenon has now happened here to the downside, where we're starting to get free bars on the underside of the Keltners. So we had been observing the measured moves that it sort of played here. So, this is just obviously just a quick recap. So we had this one that was fine. And then we also had, that one that was perfect. Got the first target, got the second target. So that's why at this point you're like, okay, well, here's the next one. And at the point we were looking at last week, we knew, look at all that. It's like, okay, well, good support, all the retracements, but, we cracked straight through. Okay, so, that was your, pardon me, that was the warning shot there. It's like, okay, well, if I'm going to try to buy this market on the pullback again, well, once we crack through here, that sort of told you, okay, it's time to stop trying to play the retracement game, because, obviously as well, we had this little trend running that we cracked. So now we're just sitting back and watching. We're sitting back and watching, and you've got to then start to look at the bigger picture going, okay, well, this run's done. So what can we see next? I think that's the main thing that I'd just be looking at here and now. So as we saw those Keltners, this has been a steep sell-off, but, the market's broken its trend. So would we now start to look at the measured moves coming back the other way? Okay, now, and that might tie into the mood of the market vis-a-vis rate cuts, rate hikes, etc. But all I would say is that if I got, this is how I look at it, if I got a bounce now up into here, and I'm not saying this is the bottom, actually, if I was putting in this into an Elliott situation, just looking at it, I'd probably be thinking something like, just get this going here, I'd be thinking something like 1, 2, this is probably 3, some sort of 4 and a 5. I wouldn't be thinking that was done. So I'm watching, but not ready to buy, because I think now, just in the short term, I'm just bearish because of the way that this has now behaved. But I would be looking for any sort of three-wave bounce up into whatever became the retracement zone. So if this proved to be the bottom, and I'm not saying it will, actually I think it probably won't. I think there's probably a little bit more downside yet. Maybe we just come down and test into this, okay, early next week, and that's what proves to be the bottom. And if just say, for argument's sake, we did that, okay, and then I'd be thinking, okay, well, that'd be the next trade I'd be looking for, because we've gone bearish. So I'd be looking for some sort of three-wave move up to there, like that. Okay, and then I would just be looking at the US dollar, thinking about the general tone of the market, and thinking, okay, well, if that's the case, do I want to take a short here as it gets to this area? So it's not an automatic short. It's just this is the spot where I think about, okay, what do I want to do here? Because if this then gets on the other side of this, well, that US dollar's probably started to slip away, and things have started to pick up again. But as it sits, the markers are that this is now trending down. The trend's your friend, okay? So if we think about this, in a broader sense, then, what could possibly be happening here? Well, I would sort of look at this now and think, okay, well, we've had a pretty good trend here. That's pretty good, okay? We've had a good measured move that hit second target. That's pretty good. The next retracement now would be still coming off. Yeah, you would have thought that, but now it's that. So that's a fair way back down. And I'm not saying that is what's going to happen. But the danger for me, okay, so what I'm saying is that we've had this trend, and that looks like now this trend is terminated. And one of the main ways a trend terminates is to go into a trading range. Okay, so that is kind of what I'm on the lookout for. That maybe now, so maybe it doesn't plummet down here, but maybe what it does is it just bounces around while the market to's and fro's, waiting for the Fed to cut rates. Because I think once the Fed actually cuts the rates, you will get the savage reaction. So this becomes more about time. All right. So on the broader sense, we will just observe. We'll just go back to this 4 hour. We will just observe how this downtrend unfolds. This down move unfolds. Okay. Because this has been up by the stairs, right? And then this is down by the elevator, okay? So we will just see how this bottoms out. And if it starts to bottom out into the range down here, okay, then you can see what's starting to form up here if we hold here. if we hold here, we could turn around this next week and do that. So that's what I'm on the lookout for, guys. I think I'm pretty neutral on gold now. Okay, I was bullish all the way through here, but now we've sort of topped out. We've come off pretty steeply. I'm just watching for the next move. But if I'm going to go long, which I'd suggest I'd be starting to be looking for long somewhere in here, my expectations would be anchored to measured move, to retracement zones, and the top of the range. Okay, that is how I'd play this at this stage. Now, we'll just quickly come over here to GDX, because this is kind of what we were looking at last week. Well, I'm just on a 4-hour here, and this is about where we left it. Remember we were talking about that they closed that gap. We might have even been a little bit further on that, but they closed the gap. I'm on a 4-hour actually, and that's like probably just need to step forward one more pub. Anyway, look, it doesn't matter. We're on the line chart, remember, with the closes. Okay, so what I sort of suggested is like, okay, well look, we never really had a good retracement here, but we were just going to use this line chart to just join up the close, and look at this trend off the bottom. And that it kind of went like that. But I think I was saying we never really had a good retracement trade. But what I was saying is it'd be nice if the retracement corresponded with the bottom of the channel. So, this is where we were sitting basically. Actually, we need to probably just turn this back to a candle so we can see what's going on here, right? So all we've done is we've just used we've used that closing price to get a better channel. Okay, so this is where we're at, and what happens. So we get up here, all right, and what happens? We just tipped into the 50, and we just nudged into the bottom, right, of that closing channel. So if we just actually take this back, so you can see how that sort of occurred. But we've got to keep in mind the connotations of what happened in gold. So this is at the point. I mean, this is just a bit of a nothing doji candle, but this is kind of at the point where if you wanted to go long this, well, that's the first chance you're going to get in terms of the retracement trade. That just lined it up. Okay, so that, whether or not you want to take that trade, it looks a little bit dicey the way that gold is behaving. So the more conservative route is to take the bigger retracement and look for the move back down towards here. Whether or not that eventuates, I don't know. But just in the short term, there's still no reason to abandon that idea, because like we said, we closed that gap, we came up above, now we've had this little 50% retrace back into the sort of the closing trend channel. Okay, I don't know if you could even like do that. Okay, so you've got that sort of geometry there. All right, so like I said, it's not, you can tighten that up maybe, and maybe you want to tighten that up, and there you go. It's not exact. I'm a little bit betwixt and between with this one. So if you're long, I don't know. I'd be keeping a sharp eye on gold, even though it looks close to ready to be ready to bounce gold because of the way that US dollars just slopped off into the close. But I just think there's starting to be a few headwinds in the next couple of weeks, couple of months, that suggests that this is going to struggle a little bit. But I don't think, my general view, I still don't think that this is going to absolutely crap out. That's how I look at it, because I think those rate cuts will come. They're just not going to come in the time that the market wants. And as the market keeps getting disappointed on its incorrect timing, it'll have to keep correcting that timing, pushing the cuts back and back and back. Then all of a sudden we're at the end of the year and there's no cuts, and we're talking about cuts in 2025. And if that's the case, you're going to get this toing and froing where we're basically going nowhere. So that would be what I'd be preparing myself for with GDX, with gold, and that's just the general view. So look, I'll leave it there. Thanks for watching. Don't forget to hit like and subscribe. I'll see you in the next video. Bye for now.